There's also a tight labor market. Trucking companies are forced to actually hire less experienced drivers as a result of that. That's causing a lot of concern and a lot of challenges for us as we underwrite our auto line and our driver selection. Claim severity is up. There's probably more seven-figure type losses over the past several years. That's driving also both severity and frequency up. And then there's also distracted driving. I think a lot of you might have heard about distracted driving in itself, and I see it on the news. I see it all over the place. It's publicized everywhere. That has really has made an a fairly major factor as far as the loss experience is concerned for the commercial auto line. We move on. We can get a little more granular here, and we can talk about liability and we can talk about physical damage. The two major areas of auto liability and physical damage are both trending higher, okay, in terms of loss costs. In our logging program, we continually focus on our need to attain adequate rate to support what you see here is the inflation, high cost of towing, rollover accidents, impacts from recent tariff threats. On the inflationary front, it's just getting more costly to repair trucks, which is a big concern. Just the tariffs alone, they say, might increase repair costs up to about 2.5%. So that in itself is really concerning to us. Towing costs, believe it or not, there are some towing bills out there that actually exceed that of the truck itself, of the physical damage on the truck itself. So these are the things that are driving both liability and the physical damage. And a lot of what we focus in on is going to be the physical damage, okay, on this. All this has, is attributable to the quality of the driver and the safety measures that we employ in our program. So these are some of the things that we just on a high level basis, some of the things that we focus in on. As I comb through, the various industry publications and articles related to driver and driver safety, and just overall commercial as well, I identify like several underwriting factors that I feel associated with the commercial trucking market that really impact us from an underwriting perspective. The number one on our list is driver shortage. One of the biggest, I think, concerns we have, and one of the biggest questions we have is how do we handle these driver shortages and handle and maintain high quality drivers when we have, this kind of shortage in the industry. That's going to be one of the challenges that we face. In 2018, for instance, we had a shortage of, the overall trucking market had a shortage of 51,000 drivers in 2018. That's up from 36,000 in 2016. So many of our clients, and what I've stated is, and what I've heard through our agency force is that these log hauling operations could increase their operations by 10 to 25% by itself if they could fill their log trucks. But they're having trouble doing it because of those, because of the shortage of drivers. Distracted driving, that's another one. Again, I come back to that. I think that that's a huge issue in the industry in itself, and the trucking industry is no doubt as part of that too. Interesting fact on that is, I just read that the other day that there's 300 million cell phones probably in circulation. And at any given moment, during daylight hours, they said there are more than 800,000 vehicles are being driven by someone using a handheld device. Those statistics really, really kind of sent it home for me. And I think that, as a result of that, we have to figure a way, and the industry has to figure a way to address that situation. And I think that there are things moving in the right direction. The increase in plaintiff bar involvement, that goes without saying. Again, we're seeing active plaintiff bars, especially when it talks about distracted driving, et cetera. There's more involvement, and that is driving up the severity of claims as we see them. Mill consolidation, that is a big factor for us, as we see a lot of these mills, a lot of our logging mills are consolidating, and our trucks are now having to drive further distances. We move from a local radius to more of an intermediate radius. So there's more trips per truck, there's more miles driven per truck. You know, the trucks itself, they take a more of a beating, you know, physical damage on their vehicles. So the cost of repairs and other safety measures, you know, become vulnerable at that point in time. Aging, inexperienced drivers, that's another one that, another factor that really plays out in our underwriting. We see that the aging force right now is retiring, and they're not really being replenished by the inexperienced, the younger generation, to the extent of the aging population. I think that's part of the reason why we have a driver shortage as well. But these are the factors here that we figure, that we look at, and we consider and say, how is it that we're going to be able to work through those issues, and you know, just be able to address that from an underwriting standpoint. There are a number of things that the industry is focused on for commercial auto improvements. These are the things that I think that are going to make a difference for us. Driver training. There's a lot of certification in certain states that are being employed right now. I don't have, you know, an idea of all the states, but I heard there are a number of states that are actually requiring drivers to be certified in certain states to be able to drive a commercial vehicle. Especially when you talk about the younger drivers, I think that's where the real training has to come into play, because some of our issues are younger drivers. Okay, we require drivers to be, you know, have at, you know, at least 2-3 years experience, and in order to do so, it's tough for them, because a lot of them are coming out at 21, 22 years old, and they want to drive a log truck, but the thing is they have to have some experience behind the wheel of these big rigs to do so. The industry is trying to address that right now, and I think that there's some positive things going on there. Telematics, greater use in GPS, onboard cameras to monitor the driver behavior. There's a lot of advancements being made there, and you know, a lot of that has to do with, you know, certain things, driver assistance. There's automatic braking, there's lane departure warning, there's onboard cameras that actually show the back of the vehicle, the unit itself. Those are all things that are going to help improve the industry as the commercial auto marketplace comes back into a realm of profitability, as I pointed out earlier. Those are the things that are positive. I think that that, as well as adequate pricing and reserving practices, are going to be really important. It's going to be pinnacle for us to really focus in on that. And in fact, I just read an article this morning that came out in the Marsh Marketplace Market News, and they basically said, and the title of the article was U.S. commercial insurance prices increased during the first quarter of 2019. They said price changes for most lines were similar to or slightly above those reported in last quarter. They said the outlier, they said here, the 4 standard lines indicated material price increases, and that one of the leading one was commercial auto. And so they're saying that consistently they have been increasing prices for the last 4 quarters on this basis, just to try to stay ahead of the loss costs, which we are trying to do, which everybody is trying to do. So adequate pricing, reserving practice is going to be pinnacle as we move forward. Loss control, we've been taking more of an interactive and a more of a participation of our loss control services to offer, you know, a lot of driver safety and vehicle maintenance safety programs within their operations. I think that has gone a long way. We've done that last year. We really tried to focus in on bringing loss control more into focus with our clientele. I think that's made a positive difference, and it's given us you know, some lift as far as our overall experience is concerned. Okay. Targeted risks. Let me just take a few minutes here and just talk about what are some of the things that we look for, some of the things that we consider in our realm as far as target risks are concerned. This does not necessarily mean this disqualifies a risk, but these are the things that we really would like to focus in on and we'd like to see. Obviously, contracts, used in the in the trucking industry and the hauling operations. We'd like to see written contracts, hold harmless agreements in place, a well-established vehicle inspection, preventative maintenance, replacement vehicle program. I'll let Candace talk a little bit more about that. So we go down 80% of drivers are no more than MVR infraction of in the last 3 years. I'm going to let Candace kind of talk a little bit more about that as well. We like local radius. If we can get, operations that travel within the local radius and stay within the local radius, that's preferable, but that's not always the case. We see, especially with the mill consolidation, that some of these are actually expanding out and driving on an intermediate basis and have to. So we're well aware of that, but again, a target risk would be one that knows their territory, knows that knows where they're traveling, knows the road systems, etc. Written safety programs, I think that's pinnacle. I think that's really important for us to make sure that we see our applicants that have these kind of safe driving and disciplinary procedures for their poor drivers. Provide wages greater than or equal to the industry. Yeah, I think that we'd like to see at least competitive wages, etc. I think those are the ones that are going to draw the more qualified drivers. Excuse me. Average turnover, we like to see low turnover rates. Easy for me to see turnover rates, 25% or less, and an average driver tenure of at least 3 years. That's going to be a challenge for us. I think that that's the thing that we're grappling with right now. We want 3 years or more. When you got these real young drivers, that's where some of our challenges come into play. Driver selection, screening criteria. We'd like to see that as well. We expect that in most of the operations that have fleets. Cab safety, I'm going to let cab safety scores, I'm going to let Candace speak a little bit more onto that as well, so she can talk about the national averages and how that intertwines with how we rate a policy, how we price the risk, how we select the risk itself. So those are going to be very important aspects for us in our selection of drivers going forward. Underwriting characteristics, I'm going to let Candace kind of take over that. Candace, are you on the line?
Yep. Good afternoon, everybody. This is Candace Chipio. I'm a senior underwriter that works with Steve on his staff of folks in the logging and forestry division. And as Steve alluded to earlier, it's very, very important to have good drivers. And obviously, we're in the midst of a driver shortage, and finding drivers that meet the qualifications obviously is very, very difficult. But there are drivers out there, and the guidelines that we adhere to, we really look for drivers whose records include less than 3 infractions in the last 3 years. 80% hopefully will have less than 1. You would think that driver age is a huge factor, but it's not just age. It goes down to age, the number of the violations, how many years that they've been licensed. We find that the more years this driver has been licensed, the better the driver that they have been. As Steve said earlier, we're having trouble with the younger drivers, and it could be attributed to this distracted driving. It could be because of cell phones, et cetera. Also, the number of years with a commercial driver's license. You can drive a car, for example, I have a Mini Cooper, but nobody on the face of the planet wants to see me in an 18-wheeler because I've been driving such a small car. Obviously, the applicable experience really needs to be in a big truck. And lastly, commodities hauled. You can have a driver that, say, drives for Walmart. He may be driving boxes, big box type exposures, but it's going to be very different than a driver driving a log truck. Log truck loads can shift, they can move, they are going off-road sometimes to pick up loads. So the commodities that we're looking at are a bit more high risk than what some of these drivers have experience in. So even though you have a truck driver who may have experience in, say, driving for Walmart or one of the large box stores, their experience isn't necessarily applicable to driving a log truck. We still want to see them go through some type of driver safety training so that we can keep them safe and keep, obviously, everyone around them safe. And like I said, 2 or more at-fault accidents If we see that, if we see 3 or more minor violations or any major violation, those drivers we tend to exclude. Now, that being said, we do know that this is a very difficult situation with the driver shortage, so we can make exceptions, but that tells us something about the insured. If they have a high number of drivers who have a high number of violations, then obviously their hiring practices need to be addressed and their driver pool needs to be addressed. If you flip to the next slide.
Sorry.
So for a major violation, people think of your general careless driving or DUIs, but there are a lot of other violations that go into the major driving violation category. Eluding an officer, failure to report an accident, hit and run, fake accident reports. Obviously, a lot of these things aren't going to happen that frequently, but these are things that if we see this gives us a very big red flag, not only because of the driver themselves, but the driver hiring practices of the insured that we're reviewing, and also the fact that if this driver got that type of a violation while under the purview of the insured's, of the insured's time, then obviously they don't have any reprimand program in place. So if there is a driver that does have an issue, we do expect the insureds to make some kind of a concession to say, okay, you've gotten this violation, you're off the truck for 6 months, or you're off the truck and you're going to be working on the log site, et cetera, or you'll be assigned to desk duty. But these are the major violations that we really have a concern with. One of these violations is going to exclude a driver for us. Okay, if you can flip to the next slide. A minor violation, they can have 3 or less minor violations, and we could still include them. But minor violations, if they don't have their operator's license in their possession, they could have left their wallet at home and forgotten it. That's not too big of a deal. Or if they are failing to display valid license plates, even if their license plates are in existence, as long as they're not driving an untagged truck, that's also a minor violation. The next one is motor vehicle equipment violations. Now these, sometimes the drivers will get tagged on these on their MVRs, but mostly the responsibility for these fall upon the insured. So any type of brakes out of adjustment, lights, brake linings, brakes on the trailers, etc., that really is going to fall onto the insured to fix. Sometimes you'll see this on the MVRs of the drivers, but not very often. You can go to the next one. And that's what brings us here. So the CAB and the SAFER reports are really going to give us an idea of how the insured runs their business from how they maintain their vehicles. And as I said, those minor violations, those are going to fall here rather than on the actual driver's MVRs. So anytime we're reviewing a CAB and a SAFER report, there are major points and major factors that we review to make sure that the insured is doing the right thing. First of all is a DOT rating score. There are various scores from conditional to pass to fail that the insured has that we look at first, and that's kind of our top tier. And as we go down, we see the ISS scores and whether or not an inspection is warranted. So if you see an ISS score that's high and it does say inspection warranted, that means that every time one of those drivers goes past one of these inspection sites, they need to be inspected. Or if a cop sees them, they will inspect them on site. The CAB scores are the next kind of hot button. So it covers 3 categories: unsafe driving, hours of service, and vehicle maintenance. The unsafe driving is basically going to be a driver that's been careless driving or speeding. Those are probably the top 2 that we see, and just the general practice of the drivers. Hours of service is the number of hours that a driver is allowed to drive. Most states have around the same laws, say 8 to 10 hours that they're allowed to drive per day, but they have to have a certain number of breaks per day. And if drivers are found in their logbooks to have driven over that, they can get pulled over and get cited for that as well. And vehicle maintenance goes back to what I said earlier with regard to tread on the tires, brakes, brake lights, lack of a fire extinguisher, lack of tie downs, load securement, etc. So that those three categories kind of encompass all of what you would be concerned with as an underwriter as well as an insured with your business. The cab alerts do have severe violations. And as noted earlier, the severe violations are basically going to run along the lines of speeding, and that can run from 5 to 10 miles an hour, 10 to 15 miles an hour, or 15 plus miles an hour over the speed limit. Those are the majority of the violations that we see, as well as we have seen some careless driving, we have seen some drug convictions, and we have seen some alcohol convictions. And the number of power units should closely match the insured schedule. Sometimes an insured has 12 vehicles, but they may have one or two that are used for parts. So the cab report really should have at least within one or two vehicles the same amount of vehicles that are on the insured schedule. If I see that the cab report has 2 vehicles, but the insured has 12 on their schedule, I know that there's a mismatch there, and this generally creates a question from our end. Radius traveled with regard to log trucks that Steve talked about earlier, we really look for someone that's going a local to an intermediate radius. Local for us is up to 50 miles. Intermediate is from 50 to 200 miles. Long haul is 200 miles and over. We really don't like log haulers that go that far, but unfortunately in this current climate with regard to the driver shortage and the mills shutting down, that's going to become a reality. It isn't right now, but it's going to become a reality in the future of the logging industry. And the last thing is the number of accidents. The number of accidents on the cab report really should match the insured's loss runs. If they don't, then it raises red flags on an underwriting perspective from the insured had a loss on December 17th, but they didn't report it. It was a rollover accident. So the insured may have the funds to pay for these accidents and pay for the auto physical damage loss that they've had, but to us, we can't appropriately price an insured because they've taken it out of our hands. It no longer shows up on the loss reports, but it does show up on the cab reports. So even though an insured isn't reporting them, we are seeing them on the cab reports. So we do take those losses into consideration. So even though they think it's not going to affect their insurance premiums, it ultimately does. Okay, last slide.
Questions?
And if anybody has any questions, there's a chat box to submit a question. We'd be happy to answer any questions that you might have.
All right, there are a couple questions that we do have on the docket. The first one is regarding MVRs. If an applicant has one accident and one speed violation, does that make the driver ineligible?
Well, I'll take that one. Sure. It actually, if they have one accident and one speed, it depends on the speed. If it's a careless driving speed, if it's 15 miles or more over the speed limit, then yes, it would cause them to be excluded. So it depends on the situation. If they had one accident and one minor speed, then we could certainly consider them.
All right, second question. When reviewing the SMS and CAB scoring, if scores are above the national average, would that disqualify the risk?
Absolutely not, because we find that some insureds have taken the appropriate measures. So for example, the CAB scores go back 36 months. And if 36 months ago the insured didn't have any controls in place, their CAB scores are going to be different then than they are now. So we look at the history as well as the loss information and the whole account. We don't disqualify an insured just based on the CAB report. I mean, unless it's really flagrantly bad. But that's if they're over the national average and it's something that they've taken strides to fix and to make sure that things like this don't happen going forward, then it's certainly an account that we can consider.
Okay, final question so far. How long are the CAB evaluation periods?
Well, as I said, the CAB violation period goes back about 36 months. Generally, the SMS scores go back about 12 to 24 months. So the total, for severe violations, it goes back 36 months. But the actual CAB score goes back 24 months. And it gives us a pretty good idea. Although, with using CAB as a tool, we can actually isolate a time frame and see what the insured scores were, say, in the past 12 months. So we can make a comparison from the last 36 months to the 24 months, to the last 12 months, even to the last 6 months. So we can see how the insured has improved, or in some cases not improved over time.
All right, no other questions at this time.
Okay, is that more or less a wrap up at this point in time?
Unless anyone has any other questions, you can always click the chat box to submit a question.
Or if you have any other questions too, I think our contact, yeah, here's our contact list. As you can see, you can call us at any time, email us. We'd be happy to discuss any aspects and further details into what we just talked about today.
Great. Well, thank you, everybody, for attending. And as Steve said, if you have any questions, please don't hesitate to email us or call us. And we look forward to our continued partnership.
Thank you, everyone.